Hello class, I just wanted to demonstrate how to prepare production budget. This is a very similar problem to your homework assignment. In this assignment, it says that your company produce product called A, and this product requires 2 grams of XYZ. What is XYZ? It's just made up name. And anyway, the cost of XYZ is $4 per gram, and budgeted production of product A is given below for the 4th quarter and the 1st month of the following quarter, and it gives you the breakdown of production budget for product A. So 4th quarter is October, November, December, and January information was needed because we need that information to complete the budget. Additional information is given here to prevent against stock outs of XYZ, meaning you don't want to run out of this material. So a lot of companies would like to have additional inventory in addition to your production needs. So in this case, the company would like to maintain 10% of the next month's production needs, meaning you may not need the 10% additional material, but you want to keep it just in case that your production does not run out of this material. And we need to make a note of this. And also it tells you that this company has beginning inventory of XYZ in October. The 3,600 grams were already existing in its inventory. And the requirement is that you're supposed to create direct material budget for XYZ. So let's take a look at my sample production schedule, a budget. Here is the example of my direct material budget. The book shows you somewhat similar budget, but this is commonly used type of budget table. So what we did is first we lay out by months, last 3 months of the year, October, November, December. Then all the information given to us was listed here. So first, required production was 18,000 in October, 16,000 November, December 15,000. So overall 49,000 of the product A was necessary. Then we need the material for the product A, which is XYZ, and we needed 2 grams of XYZ for each product of product A. So we needed 2 of these for each unit, so 2 times 18,000 would make 36,000. So that's what you need for the production. That's what you need. 36,000, 32,000 for next month, 30,000 for following months, and total 98,000 for the quarter. But in addition to that production needs, the requirement was we would like to maintain 10% of the next month's production needs. So next month, we need 32,000 of this material. So we would like to have maintained, in addition to this month's production needs, we would like to maintain 10% of 32,000 added to this, our necessary production needs. So this month, in October, we need 36,000. In addition, we would like to have additional 3,200 of XYZ because that is the representation of 10% of the next month's production needs. See that? 32,000 times 10% will make 3,200. So overall, this month, we need 36,000 for the production needs and 10% of the next month's production needs, which is 3,200. So overall, we would like to have 39,200 of this material XYZ. However, we already have 3,600 inventory. In grams, we already have 3,600. This information was given to us. So since we have the beginning inventory already sitting in our warehouse of this much, we don't need that amount. So from the total needs, 39,200, we will deduct 3,600, and the remaining we need to purchase. So the cost was $4 per gram, so 35,600 needs to be purchased, and the cost will be $4, or therefore we need to purchase XYZ in October's production needs will be $142,400. $142,400. So with this amount, you could make the budget for your company. Of course, you may not pay the entire amount in cash. Some of them will be accounts payable, and some of them will be paid in cash. It really depends on what kind of term you have. So we do the same thing on the following months. Again, you could see that the additional inventory we want to maintain is 10% of the next month's production needs. Here, December, additional material we would like to maintain is 10% of the next month's needs. This 2,400 is coming from that information that was given to us for January. In this cell, my formula was that the following month's production needs, which was 12,000 units, times 2 would give you the total production needs times 10%. So this is the 10% of next month, the following month, which will be January's production needs. So you do the same calculation and notice that the beginning inventory of November is equivalent to October's ending inventory, right? 1 month's ending inventory should be equivalent to the following month's beginning inventory. Do you agree? So I highlight it like this. So October's ending inventory should be beginning of the following month's inventory. So again, November's ending inventory should be same as beginning of the following month's inventory. So you do the same calculation, then you're going to get overall total production needs and how much you need to pay for that material.